with the charts to kind of
Hold
look
on
at
a second.
what's
Hold
going.
on. Yeah, go back to your mic. I think we're good.
Are we good? Hello? Good? Okay. Sorry. Technical difficulties. That's what happens when you go live. Um, Back to the charts. We got Bitcoin sitting at 118,128. Last night we got to 124,000. And when I went to bed, at least, it was right around 123.5. Woke up this morning, it was about 120. And then we had two data points, well, one data point and an interview that kind of brought the market down. Bitcoin, if we take a look at the chart of Bitcoin in the last day, you can kind of see here where last night we were up right around 124,196. That was at 8:35 p.m. Eastern Standard Time. And we hit a low in the last, let's see if I can see where we caught that low at. There was some in the 117s right down here, 117,674 at 12:15 p.m. And it looks like right now we're at about a little bit hanging out over 118,000. The total crypto market cap last night hit about 4.1 trillion. It was right a shade under. It was like 4.09. And we're sitting at 3.94 trillion currently. Ethereum last night, I believe Ethereum hit an all-time high. I don't really pay attention as much as others do, but I believe that we did. Let me take a look and see if I can. 48 was the old all-time high. Let's see if that one right there was really close. 4,784, 4,773, 778. Let's see over here, 779. So I don't think we did quite hit it, at least according to Coin Market Cap. But we did go as low as a shade under 4,500. We're sitting at 4,542 currently. The dominance for Bitcoin is under 60%. It's at 59.7. It's the first time that I've seen, at least doing this podcast live, the dominance being under 60%. ETH going up steadily. I remember a couple weeks ago it being under 8%, and here we are at 12.8%. Fear and Greed at 59, neutral, which is kind of weird after we're basically 12, 13 hours removed from an all-time high of Bitcoin, and here we are sitting at neutral. Really crazy. Here's the article. Bitcoin soars to new all-time high above 124K, kind of climb higher. The new number to get past now is 124. This is, I think, the sixth or seventh all-time high that Bitcoin's hit this cycle so far. And here's some of the data that was dropped this morning. I believe Bitcoin was between 120 and 121 when this hit at about, I was listening to the Finance Daily Spaces this morning. Dr. Danish, Gary Cardone and company, and the data hit live during. And PPI inflation came up very hot, came up much higher than expected, 3.7% with an expected 2.9%. And the previous month was 2.6, so we're a whole percentage point above the previous month. That's not good. Inflation's going in the wrong direction. Trump is really adamant about getting a rate cut. Data like this is not good for a rate cut, not good for markets overall. So that when this dropped, Bitcoin started to go down, the crypto market prices started to go down, stocks started to go down just because of this data being released. That's kind of how things work. And then it was actually starting to come back, and then once that happened, then this interview on Fox News happened with Scott Bessent. We're going to play this interview. It's about a minute and 12 seconds, and we'll talk about what he said, why it's important, and why it had an effect on prices.
The large gold holding, I I doubt we're going to revalue it, but we are going to keep it there, again, as a store of value for the American people. We've also started to get into the 21st century, a Bitcoin strategic reserve. We're not going to be buying that, but we are going to use confiscated assets and continue to build that up. We're going to stop selling that. I believe that Bitcoin reserve at today's prices is somewhere between 15 and 20 billion.
And Mr. Secretary, all of these ideas to monetize the asset side of the balance sheet of America, is that partly the beginnings of this sovereign wealth fund that you spoke about in your hearing back in January?
I think that these are all standalone ideas, and that as we get more into them, it will require legislation. We'll do it through statute to create a fund to hold these and to oversee them in a good way for the American people, for future.
So the really important part of what he said was about 10 seconds in, when he said, we're not going to be buying Bitcoin. The big thing for the strategic Bitcoin reserve, all the excitement when Trump was elected and the beginning parts of the administration after January was, the United States is going to be buying all of this Bitcoin. That's what the strategic Bitcoin reserve was representing to many Bitcoiners and many people in crypto. They believed that the United States was going to be an aggressive buyer of Bitcoin. And Scott Bessent this morning said, no, we won't be buying. What they're going to be doing is just doing what they've always done, and digital assets that they seize will be added to the reserves that they already have, but they're not going to be an active buyer. Those words of no, we're not going to be buying. As soon as he said that, Bitcoin dropped like 2,000 on those words, literally. It was almost back to 120. It dropped from like 121 to 118, 117 when the CPI or PPI data came out. And then it started to recover like 10 minutes after that. And then as soon as Bessent started speaking, it was 8:17 a.m. It was like 17 minutes after those numbers came out and the markets were starting to come back. They nuked right back after that. Didn't like hearing him say that they weren't going to be an aggressive buyer. Me and Troy in this podcast talked about this, and we talked about the strategic reserve, and I talked about my hesitancy to thinking that this was going to be a good thing or thinking that this is going to be something that the United States was actually going to engage in. And I talked about Justin Beckler on X making a really, really good post in regards to the strategic Bitcoin reserve not really going to be a thing, and the United States was not going to be buying Bitcoin, and it wouldn't be in the best interest of the United States to do so. And it looks like that thesis is being proven correct, because the United States, at least according to Scott Bessent, is not going to be an aggressive buyer of Bitcoin at this time. My personal feelings, I really don't care. I never did. I made that clear when we were talking about the SBR 6 months ago. Bitcoin doesn't need the government, and I've been in this ecosystem long enough to remember when Bitcoin was created as an opt-out of government, and it was the complete antithesis of governments in politics, in the dollar, and everything that the dollar represents in the U.S. debt-based Ponzi scheme represents. So, no, I really don't care. I mean, I get the short-term price action. I get that it sucks when you watch Bitcoin drop 7,000 in like a minute. But I mean, markets are irrational. I messaged somebody today who was talking about the price action, and this is why I always say you hodl over trading. You trade yourself right out of these types of markets, because markets can be irrational longer than you can stay solvent, and that's just always been the case. I mean, I imagine that people went long on Bitcoin and any other Ethereum or other shit coins last night when the market was booming, and literally 12 hours later, complete reversal, and all those people just get liquidated. I mean, the liquidation map was bloody red this morning. So all those people who could have just bought and held, and then, it eventually will come back, are all out of the market now because they thought that trading would be a good idea. Perfect example. The last 12 to 18 hours was a perfect example of why you buy and hold and you don't trade. There are almost no successful traders. Very, very few and far between. I made a video a couple of days ago I was actually driving in my car and I just filmed it, just driving, because I felt like it was this time of the cycle that I felt like I needed to make the video, so I literally did it while I was driving. This part of the cycle right now, which probably 99% of people that are in Bitcoin and in crypto love, is actually the part of the cycle that I hate the most. This part of the cycle I actually like the least, even though, the portfolio numbers go up. We're having way more green days than red days, but the actual chatter on social media around this time is ridiculous. I was going back and forth with somebody on a thread that I made about XRP, and this guy was trying to tell me that he's day trading XRP successfully. And it's just like, in a bull market when prices are going up, everybody's a genius. Everybody thinks because they made 4 or 5 trades, they made a little bit of money, that they're day traders now. I see it every time, and it's not just in crypto, it's in stocks. Like when things are going great and people make a couple of trades and they make a little bit of money, a couple $1,000s or maybe $10,000, whatever the case may be, they think that that's it. They found the cheat code. They're going to quit their job. They're just going to sit at a computer and day trade all the time. And this individual specifically was literally going back and forth with me in this thread for hours. And if you know anything about trading, the amount of time and energy and effort that needs to be put into the research, the development, the watching, it's a literal full-time job. You're not doing that for 30 or 40 hours a week. When you're trading, you're spending an exorbitant amount of time just studying than the actual trades that you're executing. So to have enough time to jump on some Facebook thread with some asshole like me and go back and forth about how you're a successful trader and I'm just some idiot that holds Bitcoin and he's going to outtrade me and all this nonsense, that's why this part of the cycle is the absolute most annoying for somebody that just buys and holds pristine assets and just watches all these idiots come in here and trade their way out of the cycle. And if they don't trade their way out of the cycle, they're going to sell their way out of the cycle. They're going to sell and they're going to be gone in the bear market. Because that's how it always is. It's very quiet in the bear market. There's not a lot of people here. But all these people come flooding in, and they're all geniuses at this point. Last night, I'm sure there were tons of geniuses, and you're probably not going to hear from the ones that got liquidated because they were long and they don't really know what they're doing, and they're just going, 10x, 20x, 50x, whatever stupid leverage shit that they were doing. And I'm sure that probably that idiot that I was talking to on Facebook had some stupid long in last night on XRP when XRP was about $3.30. Last time I looked, I think it was $3.05. Where are we sitting at now? $3.08. So if you longed XRP at 330, good luck. Awesome. You got liquidated, especially if you were on 10x leverage or more. It's $3.08. Awesome. So whatever XRP you made, you just lost it all in one trade. So, I'm going off on a tangent, but it's super annoying, this part of the cycle where everybody's, a market genius and they're telling you about all the great trades that they're doing and also telling you about how great their coin's going to be and how they're going to flip Bitcoin. Here we are. Ethereum is running. Let's take a look. In the last 7 days, it's 18-1 Ethereum being up over Bitcoin. Ethereum's up 18%. 18.6 and Bitcoin's up 1.3%. And all the talk of Ethereum's going to flip the market cap of Bitcoin is all starting to start again. The Bankless podcast is podcasting again because they're Ethereum guys. And all of a sudden, that podcast was dark for 2 months when, Ethereum was dead chain walking and nobody wanted to touch Ethereum and everybody thought it was dead. Now Ethereum's back and you got all the influencers that come back that are going to tell you that Ethereum's going to, Ethereum sound money, Ethereum's going to go to 100,000 a coin. And they're podcasting again because, things are up and, people are going to listen to them. And it's just, it's annoying. It's super, super annoying. And we'll just end that tangent.
It's funny. I've got a weird perspective on it because, I'm not a huge gambler, but I like to go to Vegas and I like playing roulette. And I have never ever tried to hit it big on roulette. I sit there and I manage the table. That's how I play roulette. I play the averages. And for me, the fun of it is not trying to start with $50 or whatever and get it up to $80. That's my goal. Maybe 100 every once in a while. And if I get to that 100, I take my original 50 and then I play with the 50. And every time I've ever played roulette, whether it's on the little robotic ones they have now that are computer-based or the actual table, it's the same thing. There's some guy that walks in, drops $100 on red, sometimes wins, sometimes doesn't, but more times out of not, the way the system works, they're going to lose more than they're going to win. And people come and go, and they come into the market at the roulette table that I'm in, and I think of the roulette table as a little market. And people are coming in, and they're there for a couple minutes, and they try to make their money quick, and then they try to get out. And I don't know if that works. All I know is that my system, in general, works for me. I may have a run of bad luck, which is different than investing in Bitcoin. But I know that there's a chance that I'll lose it. But it's more for me the fun of watching these other kooks come up and, drop like this money and not like understand like I'm not trying to make my money quick in roulette. I'm there. I get a drink. I'm there for the long haul. And I think that's kind of how I think about my financial investments, is that I'm not trying to make it rich today. I'm going to sit there for a while. That's kind of like how I equate my analysis of, if I'm going to build my Bitcoin or even my investments in general. I don't expect to get rich in a day. And there's so many people that think they're going to get rich in a day. And then they leave the market as soon as once they're out.
Yeah, more so in crypto than other markets because crypto's so young. And, previous cycles, we've seen the market cap explode in nominal terms. So people have just felt like, and they've seen all the stories on CNBC and social media. So-and-so put, $10,000 in shitcoin X and it, made him a millionaire. But you don't hear of all the people that put, $5,000 or $10,000 in a token and they go bust. Or even the one that does put $10,000 and it goes up to $1 million and they go back to zero. Because those are way more common than the guy that puts $10,000 in something, makes $1 million, and then just walks away and walks away a millionaire. Like that's just few and far between. And unfortunately, here we are. It's crazy because like the bear market is when the price is just going down and down and down. More people lose during this part of the cycle than the bear market part of the cycle, because there's more people here now coming in and they're the exit liquidity. They're the ones that are making the big bets because it's the FOMO time. Everybody's, fear of missing out, and, it's hip again and it's in the news and prices are very, very volatile and people they get smoked, and it's annoying, very annoying. Let me take a look at this chart here that we got up here that Mark Moss tweeted yesterday. Not inventing the next computer, not designing the latest chip, not programming LLMs, just buying and holding the hardest asset on earth. Bitcoin is the cheat code for us all. And it shows MicroStrategy, their Bitcoin holdings. In 2020, when they first started their Bitcoin holdings, they ended the year at 2.1 billion. 2021, it grew to 5.7. In the 2022 bear market, which he held through, it went down to 2.2. In 2023, the beginning of this cycle, it went up to 8 billion. 2024, 41.8. And on August 13th, they hold $77.2 billion of Bitcoin.
Does that mean that, they've been adding.
They've been buying.
They've been buying.
They've been buyers, yeah.
Like, from an outsider looking in, that $2 billion that they started with, what's that $2 billion from 2020 to 2025? What's that $2 billion? How much has the jump been roughly?
Well, I can tell you in 2020, when he first started buying, his first Bitcoin was at like 10,000.
Okay. So it would be that 20 times 10.
That 20 itself is
yeah
about 20 billion. Or that 2 itself is about 20 billion.
Yeah, so that they've whatever 10 times their money.
Their cost basis, I think, is somewhere around 60 or 70,000 now.
And clearly they haven't been playing with it. They put it in and it just sat there. And then they've bought more along the way.
They own something like 628,000 Bitcoin right now.
Right.
They're just constantly buying. Just buying and holding. Buying and holding. And look, you're buying and holding and you're watching your assets rise. I mean, that's a huge, huge example of a company, but you can do this with your own balance sheet with whatever your own amount of money that you can allocate towards something, your own little portfolio. Like you can do the same thing from every year, just keep adding more Bitcoin, keep adding more Satoshis, and you can watch the value of your Bitcoin continue to rise in United States nominal terms, because that's what we got here. We don't see the amount of Bitcoin they have. We just see the value in USD, which is what they're being priced in. And if he would have just put those in treasuries, it would be significantly lower value for his company. All right, another quick video we're going to show. This is a CNBC This is a CNBC video. The last decade of crypto was retail. Now the institutional wave has begun. Tom Farley, Bullish CEO. It's a company. Bullish is a company. CEO and former New York Stock Exchange president says this cycle is different. It's the next level. Let's listen to Mr. Farley's words.
The differentiation your platform has versus Coinbase or Binance, can you explain that in terms of why you've gone that road and why that is a growth path?
Yeah, great question. So we operate an exchange, and then we operate a data business that also has CoinDesk,
yes.
media outfit, and a conference business. And we wake up every day saying, how can we service institutions throughout our organization? We have over 1,000 customers, which is quite a number in the crypto space, which is still growing. And, it feels like this may be a good time for crypto because you see the Genius Act coming out of Congress, the Clarity Act that came out of the House are providing an easy on-ramp for institutions to drive into crypto. The last leg of growth in crypto, the last 10 years, was basically all retail. And if you look now, the institutional wave has begun. It's here. It's a question of how big it will be. But just based on the reception we've gotten thus far as part of our IPO, it feels like institutional investors think this could be the moment.
And that's the big difference between this cycle and previous cycles, as I've stated many times previously, that this cycle is really institutional driven. It's not so much retail. I don't think retail's really got here nowhere near the extent that they have in prior cycles. And it's showing. I mean, the prices, some people are saying it's manipulated, but every market is manipulated in some sort of way. The institutions are buying up a lot of Bitcoin, and the sad part is like we all had a chance. Like we before the institutions got here in 2024. Outside of MicroStrategy being the first and really only player for a while. 2024, when the ETFs were launched in early 2024, that's really when institutions really decided to come in. So from 2009, when it was the first blocks were mined, till 2024, which is basically 15 years, we had a shot to get as much as we wanted. You had to do the research, you had to study Bitcoin, you had to time things and hold and all those types of things, but to say that, the institutions came in, they're taking all the Bitcoin and they're not giving us a chance. It's like we had a 15-year head start. We had a big window to get in front run. It was the first time in history that you had an opportunity, and we talked about it on this podcast. Me and Troy were saying it before we were filming in the studio before that ETF, because we talked about the ETF launch in January of 2024. So the end of 2023, we were talking about like this is your last opportunity to front run, your last and only opportunity to front run Wall Street on a financial product. And many people took advantage, and many more did not. And they always say that you get Bitcoin at the price that you deserve, and some people take offense to that, but there's truth in that. Like if you don't do the work, you don't study, and you don't realize what kind of asset Bitcoin is when the big players tell you what it is, and then you're like, now you realize it. It's the price is way much higher. I just thought of something too, Rich. This is our 98th episode. The 24-hour pod it's next Saturday.
Yes, sir.
So, what do you think about this idea, real quick? We're gonna film next Thursday.
Yes.
The regular episode. That'll be episode 99.
Right. Oh, the 100th would.
I have a time block.
Yes.
For an hour.
Yes,
during that 24 hour that would be if we film that as an episode, that would be the 100th episode.
Yeah,
during the live.
You're going to be live at 3:00 on August 23rd. That's going to be your 100th episode.
Yeah. So real quick.
Well, first of all, congratulations. You know how to stick with it, obviously, and most people don't understand the importance of there's a lot. We've talked about this before. The people that think podcasting or content creation is like you're going to be famous overnight because you're a Hawk 2 girl walking down the street. Yeah. And I'm like, it doesn't work that way. You got to be lucky. and you also got to put in the work more than the luck. And you've been putting in the work, and we all want to grow quicker, but we want our finances to grow quicker, but we understand you have to be patient. You have to put in the work, and you're putting in the work. So most people, I will say that 93% of podcasts do not make it past 7 episodes. Only, I forget what the number is. There's something only like 4% make it to 100 or some very, very low number. So you are in that. You're in that upper percentile of people that have stuck with it, and you started before me, and then you understood you had to make changes to what you were doing, and I certainly appreciate the business. So, no, congratulations. Getting to 100 is not a small accomplishment.
Yeah, thank you for those kind words. I appreciate that. There is a lot that goes in behind the scenes to do all this. And I want to speak to, what Rich was talking about too. Like we have a 24-hour podcast that we're going to be doing out of this studio on Rich's channel, and while I'm doing that, because I want to promote his channel as well. I shared this to all my socials. I shared it to Facebook. I shared it to Twitter. I think it went to Instagram as well. Rich has his own podcast now where he's interviewing other podcasters. It's called Why We Pod, and the 4th episode was dropped yesterday. He interviewed me. And it's Emerge_Media Creators is his YouTube. So if you're watching this and you want to support Rich, please go there and follow that, subscribe to that channel. And the more important thing is we're going to be doing a 24-hour podcast. So we're going to be podcasting from this studio. There's, what do we got? 13? How many podcasts do we have out of the studio?
There's about 13 or 14 podcasts. Not everybody can participate.
Sure.
And we actually have invited in a friend of mine who's actually who's on our audio network, but he's on a different. He does video on his own.
Okay.
Because of his location. So he's joining us for the day, and then we also have another group of guys that we've partnered with before that do their own thing, and they're going to actually, a couple of them are popping in too. So there's something like 35 different content creators that are all going to be part of the 24 hours.
And it will be, it's August 26th.
Yeah, 23rd.
23rd, I'm sorry.
Saturday, August 23rd
at 12 noon.
To Sunday, noon on the 24th.
Yep. So 12 noon the 23rd to 12 noon the 24th, Saturday to Sunday. And I'll be doing a 1 hour block, Defon Productions podcast, which is ironically going to end up being our 100th episode. So we're going to have to figure out something cool for that for that block. I have talked to a couple people of potentially coming on as guests, and I do want to have a couple of people come on.
That's cool.
Yeah, so bring them in the studio.
Thanks for promoting everything, because it's people are like, well, why are you going to do that? But I have people that are always just negative about it. I mean, we joked about this on that interview, like about how people are just negative about everything. It's like, listen, how I spend my time has nothing to do with you. And and I like what I do, and I was super appreciative that you'd wanted to be in the interview. We talked a lot of cool stuff. And but the Emerge-a-thon, or the 24-hour pod, wasn't even my idea. One of the other creators wanted to try something silly, and what it is, it's just to celebrate not just my building, because it's not, the building only exists because everybody's willing to do what I be here and trust me to do what they do, and and it's really to celebrate all the people that spend their free time and a little bit of cash to just be content creators and have some fun, and it's a great way for us to celebrate. And we're going to be there'll be a QR code on the screen that we're donating. We're asking people to donate to the Niagara Gospel Mission, which is an agency in Niagara Falls that helps the homeless and people that are severe in need that have nowhere else to go. Veterans are part of that. Women are part of that. They have levels of support for all kinds of different people. It's not a handout. I know John is very important. We try to get people back on their feet. We get them training. We get them opportunities. So it's not just a handout. It's really trying to help people out, especially the veteran. It's a great veterans program too for homeless veterans. And the money's going directly to him. I'm not even going to touch it. The QR code goes directly to his website. So there's no worrying about like I took a percentage or any of that crap. It's all going directly to him, and it's not really a big focus of the thing, but we said if we're going to do this, let's hopefully a few extra people throw $2 to John and help him out with his vision. So it's really just going to be a fun day. We're going to do a bunch of silly stuff, a bunch of overlap, see a bunch of goofy podcasts, and I don't know, it should be a fun day if I can make it 24 hours without taking a nap.
Yeah. All right, on to the next story. Corey Klipstein from swan.com. He tweeted this early this morning, which I found to be a kind of a wild statistic. There are more altcoins, 30 million and growing, than there are total Bitcoin, 21 million and never more. Choose wisely. You know, you hear Bitcoin maxis like myself and others often tell you that like there is no second best. There's Bitcoin and there's everything else. And these coins just pop up like it seems like by the day. And you have these like and they dress themselves up as communities where they say, oh, we're a community and yada yada yada. At the end of the day, like all these communities are trying to take your money. That's what they're doing. Like these coins are created by people that are trying to use the facade of being something like Bitcoin, which they're not. The only thing that they have anything in common with Bitcoin is the fact that they're labeled as digital assets. But the qualities that are similar to Bitcoin end with that. It's just tokenized fiat, and they're just all, at the end of the day, scams. From Ethereum on down. Every single one of those coins are just made in the mirage of being something that it's not. None of them are Bitcoin. None of them are mimicking what Bitcoin is or any of the features of Bitcoin. None of them have the scarcity that Bitcoin has. Every single token after Bitcoin that's been created has had more than 21 million, from Litecoin's 84 million to Ethereum's between 100 to 120 million to tokens that are in the billions, Cardano's, XRPs, and every other token that have billions, and some have trillions, like Shiba Inu and Pepe and all these other tokens that have trillions of tokens. And then you have people that come in here that don't know any better, that think that a token with hundreds of billions of tokens or trillions of tokens is going to reach $1,000 a coin, and it's just they're playing on people's financial illiteracy, and it's to make money, to make fiat, for you to be exit liquidity, and a lot of them will say that they do it to be able to get more Bitcoin. So they're using you to sell some shit coin to be their exit liquidity so they can get more Bitcoin. That's what they're doing. They tell you what they're doing. Well, I'm doing this. I'm buying XRP and I'm going to sell it because it'll make more and then I can buy more Bitcoin. It's like they're literally using you to buy this bullshit token so they can end up with more Bitcoin at the end of the day. So you can save yourself all that nonsense and just buy direct and buy Bitcoin. A lot of ranting today. A lot of ranting. Proof of workspace at Workforce BTC. I don't think I follow this, but I'm going to go to it and follow if I don't, because I like when people tweet stuff that I use. So I will give them a follow. They tweeted the Santa Monica Firefighters Union, who moved a small portion of reserves from a 4% interest-bearing CD to Bitcoin in 2023, are up 400%. Also known as 100 years of CD interest accrual. They were the first union to do so. So think about that. Their pension fund had their union putting their funds in something getting 4% interest. Instead of getting 4% compounded yearly, they're getting 400%. So they cut down what would have taken 100 years to get to 2. That's the power of Bitcoin. It's just, you're going to see more and more of these funds and companies allocating more assets. And now with the administration, making it easier for pension funds and 401ks and such to allocate to crypto and Bitcoin, Bitcoin, you're going to see more stories like this, I would imagine. And, some of the comments here, that 100 years of CD interest is a killer mic drop stat line. A hater, that's not how interest works. This is a great example of a union making decisions based on the members' best interest. Great job, Santa Monica. And then people tagging the Teamsters, people tagging Alpha pilots. Yeah, so that's, priced in Bitcoin, 21 million. Want to hear something insane? The average American earns 1.5 million in their lifetime. They pay 525,000 in direct taxes and lose over 1 million to the hidden inflation tax. That is basically their entire lifetime earnings gone. Buy Bitcoin. Your math's not mathing. It does seem a little weird though, doesn't it? How are you you're paying that makes sense, 30%, so 525 and then 1 million to the hidden inflation tax.
It's a little. I get the point.
Yeah,
but I
it's
think
a little.
It's a little off.
It's
I
a little
think the math,
a little
the
skewed.
100, because you obviously, you think about it. Most people, their life they break even. You know what I mean? Like when it's all said and done, most people, make whatever they make their lifetime, right? They have to buy a house or an apartment or whatever, and then as they get older and they have less new money coming in, eventually they run out of money, and then theoretically, when it's gone, usually most people either end up slightly in debt and or they have very little left. You kind of, that's your goal. You're kind of like, you know what I mean? Like, so the math of that seems a little off only because, there's all the other stuff that inflation, that million. I don't know.
Well, you're losing. You're probably you're probably losing at least another third.
Yeah,
I would say probably another third. But like theoretically, the way inflation is designed to work, or in theory, is supposed to be that your standard of living kind of stays the same.
Yeah,
your pay goes up, inflation goes up. Hopefully, you outpace that slightly. Like the idea was always. Inflation was 2, your pay raise is 3, cost of living raise, right? So you're staying ahead 1% every single year. That's typically what they want. They want to keep the Fed staying at 2%. You get your 3% raise. 2% of that goes to keep the standard the same. And then you're making 1% more every single year. That got blown out of the water 2008, blown out of the water 2020. So now like we're probably averaging close to 4. We're probably at close to 4. And I know that some of the jobs that I was working, we had a stretch of 2 years that we got like a 0.5% raise. So you're way behind now. So and the numbers show that wages are not keeping up with inflation, which is a huge problem. And when you print 40% of all dollars ever created in an 18-month span, which is what we did in 21 and 22.
Inflation's been what for the last 5 years on average?
Let's Google that. Let's do the AI and see what has the average inflation rate been the last 5 years. I'm actually curious to see what Google's going to say. No, there's absolutely no way.
What's it saying?
3.2%. There's no way. Absolutely no way.
So let's
look at here there you can tell right off the bat it's bullshit because look at 2022. Right. It's saying it was 6.5%. We know it was they were telling us it was 9.
Right.
I mean, we had data that showed 21 and 22 were both right under double digits.
So my point is, let's just say it's 6. Let's just pick a number. Most people don't get a 6% raise every year. You don't. Right?
Absolutely not.
Most people are getting 1%, 2%. I know a few people that in unions got a few 6% raises in a couple years of their contracts, but like maybe the first year was a 6, but then the second and third year of the contract were like 1s and 3s or something, and then maybe they got 6 the last year or something. So those raises are not keeping up with the annual inflation rate is. So, I mean, even people that are happy they got a 6% raise, that's not even keeping up with inflation over the last, especially if you average out that raise, it's probably only 4% over the life of the contract. So yeah, like you're not. It's
See,
that's unions. Those are
Google,
union rates.
Google's telling you this is the crazy shit. Like you don't know what the truth is. I went on Google. Obviously, look at my screen. Share my screen. I went to Google to look at that, and it's telling you 6.5% estimated by some sources is what they say. I went on ChatGPT, and ChatGPT is saying 2022 had inflation at 9.1%. That's an enormous difference.
Yeah.
Enormous. 6.5 to 9.1, and
There's
it's
no
telling
way
you 3.2.
2024 is 2.9, is it? Well, I guess it is down a little bit right now. Inflation.
We just had a number today at 3.7.
Well, and it depends who's telling you the number.
It's also the basket of goods that they're using to see Investopedia what they say. Will it have by the years? Stupid ads.
I mean, granted, inflation's down a little bit, but that doesn't mean anything because wages are worse. Wages are down more than interest rates are down, and interest rates are so high, so it doesn't. I guess my point is that like we're not keeping up.
Investopedia has what was it have 6.5 to 4.5,
which sounds more on the average because the 1 year was so high. 7%.
What did we have at Google? Google had it at.
And I guess for the math doesn't math to me because
you just can't trust anything.
When you say 7%, let's say 1 year 6%. Let's say it was 6. I still think that's low. That's 9%. That 9 doesn't get canceled out if the next year's only 1 because it went up 9. It's coming back down. So that 9 is incorporated in the calculations for the rest of your life.
Here's the thing:
you can't. It's not annual. Like it's not like it.
This is what people
itself.
don't understand about inflation.
When
it's 9%,
yeah,
right? Inflation is up 9%. That means the cost of goods went up 9% from the prior year.
Right.
If the next year it only goes up 3%, it's 3% higher than the 9% was.
Yeah, simple math. Like if
so
you had $100, if you had $100 and it like there was 9%, right? That's $109.
Yep.
And then the next year, the 1% is calculated on 109, not on 100. It's calculated on 109. So it's 1.09. It went up. So now it's 13.09.
The biggest
and
like
don't,
bullshit.
That's why that little formula average out the 5 years. That's not how it
works.
Yeah,
when Powell comes and trots his ass out to the microphone talking about how they're doing so great, and it's like, oh, we're trying to get things back to 2%. It's like you can't eradicate the back-to-back 9% years we had 2021 and 22, which is what we've been told. I don't know. I feel like they wiped it from the internet now, but I remember seeing because we were podcasting in 22 that 21 and 22 had back-to-back at least 9% years. So here you're starting at 100, like you said, right? The next year is 109, and then the next year is 117, right? So you went from 100 to 117 after 2 years. And now we're trying to get it to 2% more. Well, if it was $100 3 years ago, and now it's only 2% more than the 117, you're still effed.
Right.
And if wages are not keeping up, like we didn't win by getting back to 2%. Like it's not a win.
Right.
It's wild. Those are the type of things when you have a population of people that are financially illiterate like we have in the United States, like it's an epidemic, like people are just financially retarded to use the word that might get us struck on YouTube, but I mean it's true. I mean I talk to a lot of people on a daily basis about finances, and people are dumber than you would think when it comes to saving, investing, basic financial knowledge, understanding products and interest rates, to not having any idea what's in their 401k, or people that don't know that 401ks aren't taxed, but will be taxed at some time later on, not knowing the fees in their 401ks and how much that eats away at their what they're going to be able to get out of it 30 years down the road. Like there's just so many things. So when you're talking about inflation and people argue over, oh, well, it's down to 2%. It's like, man, if you go back to 2019, like we're living in a completely different time. Than 2019 to 2025 is like, in my mind, it's like 1980 to like 2000. That's the type of shit we
inflation
saw.
really wasn't even really a thing much until the 60s. Like it really, I mean, we always had inflation. Things would go up slowly over time.
Late
But
60s.
late 60s.
You know why?
I'm going to say Vietnam.
Which was, what did we do because of Vietnam?
Well, because we got off the gold standard in 72.
Officially in 71.
But we started
we were
already.
off,
We
were
already
off
started
it, yeah.
to pretend that.
And the rest of the world knew.
Yes.
Yeah. Yep.
I mean, I thought it was because James Bond blew up all the gold in Goldfinger, but that was the '60s, which is kind of funny because I still watch that movie, and like I watched that movie once with my son because we watch all the James Bond movies. He's like, "What?" Like he just thought it was funny. There's like we don't even know how much gold's in Fort Knox nowadays. But no, but like inflation really wasn't a big thing until the late '60s. Through the 80s and obviously the 70s with the energy crunch and then getting off the gold standard and all that stuff. And now inflation has just gotten ridiculous and ridiculous. I mean, like, I saw a chart a while back and it talked about, like, the value of a house, how much it cost to buy a house in 1900 versus 1940. And it's not significantly different. It's not. It's like barely like 4 or 5% over time or whatever the heck it was, you know.
Yeah, it's a little bit disconcerting would be the word I guess you could use. Robin Sayer, really good follow. He's got a really good Bitcoin podcast. He tweeted this. I used to think that Bitcoin was an IQ test, but I realized it's actually an ego test. And this is the part of the cycle that I really feel this quote the most because people are really in their egos in this part of the cycle. Their thesis on all these altcoins, because altcoins may be outperforming Bitcoin on a short-term time frame, makes them believe that those coins are something that they're not and will unfortunately bring them away from Bitcoin, and they'll put their money in these other coins from the top large cap coins all the way down to meme coins and, you know, shit token, like really, really shitty tokens, and they'll just continue to lose value. It happens every single cycle, and you have to be humbled. That's why we say stay humble, stack sats. Bitcoin will humble you, and if you don't take the time to study and you don't take the time to learn, it ends badly. All of us, myself included, I've all shitcoined. You know, I shitcoined when I first got in 2014, 2015. You know, I owned some of those shitcoins back then. And when people come into crypto, unfortunately, that's kind of, you know, you go through like that. It's like a price of admission is to learn what you're doing. And you know, you got your XRP shills, your ADA guys, your ETH guys that, you know, they think that that's going to be the next token because they don't realize. And you learn the hard way. You buy those tokens. The bear market comes and you watch those bleed immensely against Bitcoin, and you watch your value just evaporate. And then you start to, if you stick around, you start to really, you know, look for signal, and you find it, and you follow good people that give you good information. You learn about what Bitcoin is. You learn about why it was created. You learn about the scarcity model. You learn about, you know, Satoshi and Satoshi walking away. And, you know, you learn all the things that make you realize that Bitcoin is just significantly different than everything else that's out there. And you put your ego to the side to do that. Some very, very, very smart people are anti-Bitcoin and continue to be anti-Bitcoin because of their ego. So it's not that necessarily it's an IQ test. It's more of an ego check. You have to check your ego because of all the things you've been taught in the traditional system. 401ks, you know, put your money in, you know, index funds, buy real estate, all these fiat-based things that we've been fed to believe is the only way. And when something new comes along that's different and is a technological advancement, your ego tells you that it's a scam. Your ego tells you it's no good. And you make things up in your head as to why the price is going up and continues to go up. And you continue to allow your ego to convince you that it's eventually going to come down and it never, over the long term, again, it obviously has dips and it obviously has bear markets, but over the long term, it's a right angle and it just keeps going up. And we believe as Bitcoiners that it goes up forever. We got a little bit of time before we're ending the live stream today. Any other thoughts that you got, Rich, that
Yeah, it's something I thought about the other day. I had some family in town from out west, so we took them to the Big Art Museum up in Buffalo, Albright Knox Art Gallery. It's a brand, they just put an expansion on it. And we're walking around, and the one guy, my niece's husband, had never really been to an art museum before, and we started talking about the art. And I was like, we had a funny conversation suddenly about art. He was like, how does this art get here? And I said, well, a lot of it's donated. And then it made me go home and research this. So I took pictures of a couple of the names of the people. Then you start realizing these people buy art, and then they essentially say to the museum, you can display my art. And by the way, while you're displaying it, you're responsible for the insurance on it. So they're not insuring the art, so they buy this commodity. They give it to somebody else to insure it for maybe ever. Essentially, it's given to them forever. They can't sell it. They have to keep it. Once they loan it to the museum, they can't. And then the other thing I found very amusing about it was their market, it's being displayed. So it actually goes up in value because people like, wow, that's really pretty. I got to see it.
and I saw it at
And it markets the artist. So the artist goes up in value. So they're actually, by donating it, I'm sure it's completely altruistic in the reasons that they do it. But it was funny because I always knew that art had value and it's a thing that people do. But I didn't really think about what a stroke of genius it is that if you own a piece of art, to give it to your local museum, because then yes, you have to get it there. There's some issues that come with it. There's the risk that some kook goes and destroys it. But at the same time, you're going to make money off of it. I just found it was interesting. I thought that was an interesting thing because we often talk about, well, just buy art or buy gold instead of Bitcoin. And then I was thinking about it, and I think now that I'm becoming more savvy about financial stuff, I probably never in my life would have ever thought about how and also the other thing I forgot to mention too is the people that are donating them, it gives them a value like their brand, because, oh, wow, the Jones family or the whatever family, their foundation is very nice because they lend their art to the museum. So it makes them look better in the eyes of their community. So it's just kind of a win-win for those folks, but it is a manipulation of the value of that painting.
Yeah, you've heard of Masterworks, right?
Yes.
Yeah, they created that platform where people can, it's wild. They do it with sports cards now too, where you own, you pay money and you get a share of a Monet painting or I don't know, whatever,
right?
The Mona Lisa, and they do that with like Mickey Mantle rookie cards where you pay money to, and it just feels super scammy because you don't really, like, you literally own nothing. You just own, they're saying that they have it.
You get a certificate. It's like a stock.
Well, I mean, it goes to like trust. Like you have to trust.
Yeah.
And I don't trust. I don't trust anything or anyone. I trust them to be human and I trust them to have flaws. And the fact that the whole system is built on trust is the problem, which is why Bitcoin is so beautiful, because it requires none. Doesn't require any trust. If you want to show the screen really quick, I usually never show any of my socials. This is my Twitter or my X. If you don't follow me, if you're watching on YouTube or you're watching on Facebook, at Rinaldi_Don. This is where I am the most active on X, tweeting constantly. There's our live we're a couple seconds behind and you're talking there. Yeah, please follow me there. Again, all the socials are going at the bottom of the screen right now. What I just showed you at Rinaldi_Don on X, Defon Labs, Defon Productions on YouTube. If you want to follow me on Facebook, the only platform I'm actually monetized on that I like the least, you can just search NF, Niagara Falls, as in Niagara Falls, NF Bitcoin Don, and you'll find me in my profile. Post a lot of stuff there as well. A lot of the stuff from YouTube. We go live stream there as well as X, live streaming on YouTube. Next week, Thursday, will be episode 99. regularly scheduled on Thursday. And then I think we decided that we are going to do episode 100 during the Emerge 24-hour Emerge-a-thon. So you will see me. I live close to the studio. You'll see me multiple times during that thing, but you'll definitely see me from 3 to 4 o'clock on Saturday doing episode 100. I think we're doing our fantasy football draft that night.
Yeah, I think at 9 o'clock.
I'll be in studio for that. I'm trying to get my son Cash to show up. He's kind of nervous about being on camera for that, but I'll definitely be here for that. And maybe we'll pop in at some weird hour in the middle of the night and see what's going on. But I do want to take the time to thank. We're at 498 subscribers as of right now on YouTube. YouTube is so hard. I don't take any sponsorships. Everything comes out of pocket. I do this because I probably could do a way better job of promoting and trying to shill the stuff, but I try to make it as organic as I possibly can. But it'd be really cool to get to 500 subs. We're at 498 right now, 2 away from 500. I'm thinking of probably at some point after the 100th episode, hopefully we're past 500 subs by then, doing a little bit of a giveaway on the channel, maybe giving away some Bitcoin or giving away something cool to the people that are subscribing, that do tune in. I appreciate it. Even if there's only a couple people watching, I do appreciate people tuning in to check out what I'm saying. Again, for all the people here local, feel free to reach out to me through private messages, comment on the videos. Always willing to have conversations about Bitcoin and orange pilling you and keeping you away from the shit coins. As always, as we always end every single podcast, 98 times, don't trust, verify. Thanks for watching. Peace.